This next session is called Financial Literacy, Financial Capability and Financial Advice, and it's part of us shifting the conversation right into the heart of the consumer discussion. And absolutely delighted to welcome back Russell Hutchinson and his fantastic team of Katrina Church, Ryan Koppens, Camilla Tumai and Matt Raeburn. Russell, please welcome you and your team, and I'm sure you'll introduce them. Can we warmly welcome them to the stage? Thank you.
Kia ora tātou, ko Russell Hutchinson, taku ingoa, ke Chatswood Consulting I Mahiana. My name's Russell Hutchinson and I'm from Chatswood Consulting, and I'm really excited to be able to introduce our panel to talk about financial capability, literacy, and in particular connecting those to advice issues. So I'll introduce our wonderful star panel now. First of all, on the right we have Matt Raeburn. Matt Raeburn is a Senior Policy Advisor at the Ministry for Environment, and so Matt's going to give us the message about new climate-related disclosures a little bit later on in the panel. We also have Ryan Koppens. Ryan is Head of Advisory at Southern Cross and is going to contribute to the panel in the bringing the health and wellbeing dimension into our advice conversations. And probably better known to most of you would be Katrina Church. Katrina is obviously a director of insurance people, but also known as the New Zealand chair of MDRT, and probably known to many of you. Equally, we have Camilla Tumai, who is general manager of Ikonik, has built an advice business up from the ground, and is also now head of partnerships at Advice First. And so those are our advisor voices on the panel. And continuing the theme from this morning, where we're not so much talking about the new regime as about the world of advice that we're going to be entering into, we're going to expand on those key items of financial literacy, capability, and perhaps more importantly than that, how do we turn people from being informed and perhaps being wise and motivated, some of those words, to taking action. And that's really where advice comes in. How do we get more people actually turning that knowledge into action? We also want to explore how we can help consumers to live their best life financially, so to speak, and look at the whole person in the course of that advice picture. So we've got lots of questions, but you can ask questions too, and they come up on this pad here. If you log into Slido, you've probably had some practice before. If you haven't, then please do, because it's fun when we get questions from you for this session. But to kick off, I'm going to ask, first of all, looking at our advisors, and we'll go with Katrina first. So in terms of financial literacy, we've heard a lot about this. We've had this theme going for a couple of years. What are you seeing? What change has there been? What are clients like when they come and approach you?
I think you need to look at what financial literacy actually is, and I had to look it up myself just to really understand the question. And it was more around, do we need to, our clients, we need to lift their ability to have skills and knowledge to make sound financial decisions. The biggest issue with financial literacy is making decisions. So we can spend a lot of time actually helping people uplift their knowledge. There is so much more knowledge available, we're doing more in the schools, all of those types of things, but people are still reluctant to actually implement, get advice, make things happen. That's probably what I would see that's happening out there.
Nice, yeah. And when clients come and see you, perhaps Camilla, what are you seeing in terms of their literacy? Has that improved? Is it better?
I think it's been improving, but just in relation to what you were talking about, I do feel that there is a bit of a disconnect, and there's lots of work that needs to be done around financial literacy, but I really do think that a lot of that work actually needs to be done in our space, and we need to be working more collaboratively together if we're going to achieve the outcomes that we desire. Yeah, I was just thinking about, advisors, and there was a little bit of a discussion before. If you want to create the ultimate client experience, then, you want to take them on that journey of finding, financial independence, which might be through KiwiSaver education, it might be helping them into home ownership, mortgages. It might be protecting their family's financial future through insurance, helping them live their best life in retirement. And all of that is obviously really important, but I think the key to that is collaboration. So if I think about, you know, my current journey right now, I've gone from being that one-man band advisor through to running an advisor business, building an advisor business, and now I feel like I'm at the end phase, because we're all going through change and we're all evolving, and that end phase for me is around collaboration. So yes, just literally in the last week or so, I've joined forces with another advisor business. And so many people have been saying to me, why have you done that? You know, you've lost your independence, you've sold your soul. No, I haven't. The simple answer to that question is collaboration for me means so many different things. It means scale, it means growth, it means sharing of ideas, sharing of talent, of resources, and all of those things together create opportunities. Opportunities for us to be able to make a real difference. And, you know, so I put it out there to advisors, we need to be connecting more, we need to be talking to each other more, sharing, yeah, working together. You know, if you're doing mortgages and that's all you're doing, you can increase, you know, your customer experience by connecting with other advisors that might be, you know, having conversations about insurance or other things. And just one last point on that, you know, I've just touched on advisors and advisor businesses, but I think about our industry as a whole too. We have organisations within our industry right now that are amazing at running educational programs, creating awareness and sharing knowledge, but there's a disconnect, and the disconnect was really clear when I heard earlier about the taxi driver, and you know the awareness was created, and it was all about now she needs to go and get some advice. So where do we, you know, how do we connect those
Where is
entities?
the join to get the advice?
Because that's only one part of it. The other part of it is the actual implementation of that advice. We're
Giving
doing
people that confidence to actually make a decision.
Yeah.
So you can build the skill and the awareness, but you actually have to give them confidence. Let them know that they're making good, sound decisions, and support them through that. And then when the decisions get tough, be there.
Yeah.
And the more we do that, the more they'll tell that story to that next person, and the next person, and our advice industry continues to grow, and people's, you know, reach will grow.
Maybe the language needs to change too.
And thinking about some of that kind of general information, the educative material that you're talking about, there's one of the concerns around this period is that perhaps there's, you know, some of that might disappear, or it might not, you know, because of confidence around the boundary between just good general information and advice. But what have we seen in terms of, you know, the provision of kind of general information, which is getting people to then pick that up and go, oh yeah, this is from an advisor, I can now go and see, you know, that advisor.
So there's a whole bunch of people that are going online and looking at information, but they're still not implementing, they're still not doing a call to action. So an advisor really creates that call to action, and it maximises their position. And there's a real need for that. If you're going through a claims process, if you have an advisor beside you, you're really in a completely different space than when you're going direct. When there are problems, or acknowledging on a terminal illness. I've had 7 claims since January that are significant: traumas, life insurance, terminal illness. And 7 of those, only 2 of them had a will. You know, and these are people that I've been given advice to and I've been telling to. And so we sort of look at that and go, right, there's some financial literacy we really need to do around estate planning. But because that's always sat under that financial planning bracket, there's so many of us that potentially aren't really talking about that a lot. You know, we talked before when they mentioned that the code is really the ability for us to don't get caught up too much, really be able to give as pertinent information that clients need. I think that's where we've got a great opportunity. Instead of the RFA, the AFA, we can really sort of delve into that, as long as you've got the knowledge and the skill.
You've got experience across a couple of channels, really, in your role at Southern Cross, Ryan. What can you tell us about the readiness of clients to act?
Yeah, we create a whole industry around asking people to sign up to get on board Southern Cross, and often through an employer work scheme, they're getting it for free. So to make contact with someone 7 or 8 times, trying to encourage them to get something for free, let alone having to contribute, is crazy. So people are often scared. I think there's the feeling of being judged, perhaps. They're uncertain of their own situation and perhaps their illiteracy in that space. They're looking for a safe harbour, and I think the challenge of the industry is how to be that for them, and how to provide, how to get them to call in or make contact to reach out. We talked about yesterday, there's so much information online now, and people are browsing, looking to, I think they're ending up in a more confused state.
Yeah, I agree.
So there's so much opportunity. It's just how do we tap into and provide pathways for advice.
Yeah, and so in terms of encouraging people to actually go and take advice, we know from the FSC research that people that take advice save more, invest more, and they're happier about it. So what are the actions that we should be taking as an industry to try and get them to go and get advice? I'll go to
Yeah,
Camilla.
maybe one of the steps is, instead of just building the awareness and suggesting you should go and get some advice, taking the next step and suggesting where they could potentially go and get some advice from.
Right, yeah.
I know there's some barriers around that, but I think that we need to do a lot more work in that space of creating the connection so we can implement.
Yeah. Accessibility is huge,
Yeah.
right? And COVID absolutely ravaging the world, and in this country we're so blessed at the moment that we haven't got that issue. But what COVID has done for New Zealand, if anything, is it has advanced our technology space hugely in such a short period of time. You know, I haven't actually sat with a client bar 5 or 6 times this last 12 months. It's all been virtual. It's all been on Teams or Zoom. And in Auckland, where you can drive from one end of the city to the other and it takes you all day, I'm actually able to see 5 or 6 people, families. They could be different parts of Auckland, even New Zealand, and they're able to come together to make decisions. So, you know, technology, I think, is going to create a lot of accessibility, and I think that's where we need to explore around that financial literacy aspect. If they know that they can actually look you in the eye, but not physically have to be in front of you, then you can start building that trust, and they will actually reach out to you more so and ask those questions before they go and make a decision that you have to untangle later on. Connectedness is so important. So, you know, not the connectedness on Facebook and social media, but it's more around that personal touch. And when we found COVID happened to this country, I don't know about you guys, but I spent 3 months just in the trenches, talking, sharing, Zooming. We all did, I'm sure, and you're doing it more so now. And giving people that knowledge to make sound decisions. I've never seen so many cancellation requests, and I've never saved so many cancellation requests. Because when you do talk to someone about affordability, or you do access around divorces and marriage splits-ups, there has been a bit more of those this last 12 months, then you're able to actually unpick the issues and really deal to it, and people feel confident to make smarter decisions. So I think accessibility is going to be a big thing going forward.
Yeah.
Yesterday, the Minister talked, specifically thanked the advice industry for some of that work you just talked about, you know, in terms of working with clients, you know, who had their work disrupted by COVID and, you know, needed advice. But accessibility, obviously, it's a key theme. It's about time. Sometimes people just find it really difficult to find the time to get advice. And also sometimes people find it really difficult to afford advice. And I want to get something from each of you on what can we do to break down both those time and cost barriers? Camilla.
Yeah, it goes back to building connections, and whether or not you're doing that in person, whether or not it's in the industry or it's externally or it's through a digital platform. We're doing a lot of work on our messages to clients, and, you know, just simple, effective messages I think are important, and just working on the advice process and the customer experience. So gone are the days of, you know, everything being paper-based, and if you're still, doing everything paper-based, then you need to start evolving with the times. And why? Because the client's expectations of us have changed and they are evolving, and now they're thinking about it differently. So, you know, if you're communicating with a client and you're adding all the different elements of digital experience, the way that you communicate, the way you collect information. It builds trust, and it's something that's important, to clients. I also think that we all have we all learn differently. So it's important that we're not just being that advisor that's sitting there and talking. We've got, people that are visual learners with short attention spans. We have people that are kinesthetic learners. We have people that are auditory learners, and we have people that are analytical learners. So it's trying to find different ways of being able to connect.
We've also got those culture barriers too, right?
100%.
There's different cultures, in Auckland in particular, where there is such a mix. We need to learn how to address that ourselves, and be able to. You've got differences around male and female, the way they think, the way they act, and how we actually talk about financial literacy with them, and get them to really start having a voice, empowering them to have a part of the process. And when they start doing that, then it's actually amazing how you can turn them on and they start becoming your best friend in the email space, but at least you're actually getting them engaging, It's really cool.
Yeah, that's right. Ryan, do you want to chip in on accessibility?
Ours is all about pathways. So there's 881,000 currently members of Southern Cross Health Society. So a lot of New Zealand are already with us, but only 3 out of 10 Kiwis have health insurance. So our goal through corporates is to enable, particularly the employees, to then have a pathway for advice or certainly help in the future. And we're doing a lot of work around trying to have those referral pathways to make sure they get to our advisor network.
Yeah, one of the audience questions here is that, we agree that more Kiwis could benefit from advice, but we already don't have enough capacity to meet existing demands. So, how do we grow enough capacity in the industry to provide the advice that's required? Where Katrina's keen. Here we go.
I've gone from having teams of 18 advisors to now having a team of 3 risk advisors. And I've done that because it is such a different environment to what it was in the past. And to be able to be accountable for everything that's done, and any bit of advice that's given, we've really sort of come back and said, right, how do we want to make this happen? So when we go to actually grow that again, which we will do in the second quarter of this year, maybe only 2 this year, and we'll do that by actually having internships. They will get paid, where they'll actually go through a 2-year program of actually understanding the underwriting. So they'll do underwriting, they'll do claims management, they'll do customer services, they'll learn how to do paraplanner services before they actually even start engaging and giving advice. They'll become our back room, our fantastic support team, and then we'll give them confidence to get out. And I think that's the way that we're going to do that in our firm, and we'll do that within the mortgage side as well. By doing that, it gives us greater confidence that the experience is the same for every single client that touches our firm. And that way we can manage the regulatory environment, but also make sure we maximise the position. We're a domestic, commercial, foreign general, risk and mortgage business, so we want to be able to, every single client, have those services, because then that means that we can spend more time with those clients because we've got more revenue.
And another quick one from the audience, which follows on from that, was, should we as an industry have a pathway to bring advisors into the sector?
Absolutely. And that pathway can be in so many different forms. So again, I think it goes back to that whole connection and collaboration. It's what are we doing in the education sector? Well, what are we doing in the careers department of colleges to create opportunities and awareness? What are we doing within the tertiary sector to create opportunities? What are we doing in our own industry to create opportunities for those people? And it also takes me on to the whole thing about, vulnerable clients. A lot of our vulnerable clients come from, my family cultural background, Māori Pacific Island people. We don't have enough Māori and Pacific Island financial advisors, yet how are we supposed to really make an impact in that space when a lot of my people want to deal with someone that they trust, someone that understands their culture, someone that they can relate to, but there's not enough of us to be able to provide that service.
So diversity in our recruitment is part of that.
Yeah.
We need to see it from leadership from our government departments as well, where they are actually maybe saying that we do an amazing job more, and really give that awareness to the New Zealand public. If you just look across the ditch to Australia, those advisors are decimated. You know, they themselves feel so beaten up by what they've experienced over there from their own regulator. Blessed to see that we don't have that same sort of experience with our regulators, and that fear is not there that they experience. And so I think they've got a part to play. The government itself, MB, have a part to play, and that's where that confidence will grow, because it's all about confidence, making smart decisions.
We're going to turn to the sort of the whole person view around financial planning as part of our theme now. And obviously, if you're in poor health, you can't work, you can't earn. How does health connect to wealth, Ryan? And what are your views around how that works?
Yeah, I think good health is wealth. And I think in our current public health system, they are under pressure. You're going to see growing demand for investment from government in public health. And I think the ability for people to take responsibility for their own health pathways in the future is really important. And that's where, obviously, health insurance plays that part. Part of the challenge, obviously, when somebody does get sick is speed and access to care, that is a presenteeism, the pain they're dealing with, the time out of work, and if you take a whole family approach, it's the parent looking after a sibling or a partner through a major health journey, which is also impacting their financial wealth. So health insurance is all about trying to address that and getting people through that challenging case or issue very quickly.
One of the questions from our audience is how do we balance the cost of those things? Spending on my insurance program now versus my retirement, later. Where are you at on that front?
Yeah, definitely an age and stage conversation. And for us, it's about having a set of products that enables you to slide up or down a scale to apply a solution an excess or a plan type that's appropriate for your age and stage in life, and to have with pathways, but to be able to make a more affordable approach as you may choose to self-insure or have an excess of to help reduce your premiums on an annual basis. So, yeah.
I come from a world of, as everybody in this room as an insurance advisor has probably had that call, I need to cut my costs, I need to, everyone's simplifying their life, and COVID has given us that opportunity to maybe simplify our goals and fast forward them a little bit in some cases. But there's not enough brave conversations about actually increasing your income. So if you've got a gap here around your insurances, you need them, and then you've got to start looking towards creating investments and assets and getting a mortgage and paying the bloody thing down. Well, really, quite frankly, you actually sometimes have to increase your income, and there are many ways that we can teach people how to do that. So part of your fact find is actually really looking at your clients around have they maximised their potential? Are they sitting still and not really looking at ways to increase while still maintaining that balance about wellness and so forth?
Nice, yeah. And look, part of our picture in terms of looking at the whole person is obviously, their values and their ethics when they come to us. And climate change is one of those issues that affects our whole community and indeed the whole world. And so New Zealanders are increasingly concerned about that. And I'm going to ask Matt to tell us a bit about the climate-related disclosures, if you can now. And then
yeah, sure. Thanks, Russell. Yeah, I think climate change is very relevant based on what Camilla and Katrina, you've been talking about, connecting to people. It's a value for a lot of people, especially in younger generations, about what am I investing in, and what does it have to do with, and what are those companies that I'm investing in, or stocks or funds or whatever, what are they doing in the climate change space, because a lot of people are concerned about their financial futures, and if climate change isn't something that we act on with due haste, people might be concerned that they won't have financial futures, so something to think about. But as far as what we're doing at the Ministry for the Environment, climate risks and opportunities are already existing. They're just not very well disclosed, not disclosed consistently, not disclosed transparently. And so what we are doing is we are implementing new requirements which will go into effect for the next financial year, FY 2022, which will require all insurers, all banks, and all companies listed on the New Zealand Stock Exchange, as well as managed funds and maybe a few other bits and pieces once the legislation is all sorted, to start disclosing those climate-related financial risks and opportunities. So those first mandatory disclosures will start being issued around 2023 for the FY 2022. There are a number of companies that are already voluntarily doing these kinds of disclosures. Meridian is one who's been doing it for a while. Westpac just did one. I'm just going to kind of pull some numbers that came from the Westpac report, because I know there's a lot of concerns about, are these kinds of climate-related financial risks, are they too speculative, or is it actually producing like decision-useful information? And also, is it going to tell me bad news that I don't really want to know? As Westpac found out, actually their percentages of mortgage portfolios that were exposed to climate-related hazards weren't actually as bad as maybe some might have thought. So when they released their most recent climate-related financial disclosures report, they said that 2.3% of their residential mortgage portfolio, 2.1% of their commercial mortgage portfolio, and 2.9% of their agricultural mortgage portfolio were subjected to heightened risks of climate-related climate-related hazards, rather. And that was defined as basically a 10% exceedance of risks over, I think the period was a decade, so a relatively short amount of time. And those hazards include things like storm surges, bushfires, those sorts of things. But now they have that information, and now they've disclosed to their investors and to the public how much, at least with some numbers, how much exposure they actually have. And hopefully other banks and other companies that are also going to be subject to these requirements are going to start to do the same thing. Then you start to have a more full picture of who is exposed to climate-related physical risks, as well as who is exposed to the risks of New Zealand's enormous and economic transition that we're about to embark on to get to a net zero by 2050 emissions target, which the government has already agreed to. And those changes are not 30 years away. We have to reduce our emissions by 30% of 2005 levels by 2030. So you're going to start to see some enormous changes happening very, very soon. And the current government and our climate change minister, Minister Shaw, are very eager to get some action going very, very quickly. So yeah, interesting times.
We're going to come back to you for a bit more detail in a moment, but how are those kinds of disclosures going to affect advice process? Maybe if I pass that to you.
Obviously, we're not getting inquiries about it now, but I can give an example of someone who came to us a week and a half ago that are looking at a coastal property and looking to purchase. They wanted to know if they could insure that property. Now, through floodplain information and all sorts of other bits and bobs, we can insure them today, but I can't give them confidence I can insure them in the future because it will change. And that's where thinking about the fact that that's going to have a mortgage attached to it. So people are making financial decisions that are going to be impacted by climate change, and we probably need to get on board with knowing that a lot more. And you only have to look at different regions in New Zealand. The price of house insurance alone in Southland versus Wellington, where there is the one risk we've seen for a long time, earthquake risk. Would you really want to invest in those sorts of areas without having full knowledge and more disclosure around that property? You'll see lenders actually exiting from those areas big time, or asking a lot more questions. It will become more expensive to actually purchase those areas.
Yeah. Those are some really good examples of kind of some of the challenges in the advice conversation when we're introducing risks. But are there some opportunities in the advice conversation perhaps to deepen engagement, because we're talking about, essentially what a customer values and what's important to them? Camilla, maybe you'd like to.
Yeah, so sorry, just thinking about the question. Yeah. What exactly was it that you wanted to elaborate?
Is there an opportunity for us to engage better with customers when we're talking about their values and their ethics?
Yes, I definitely think there's a lot of opportunity. I mean, just sort of in relation to the topic that we were just talking about, we're definitely seeing more of an appetite for it, and yes, it is definitely with the younger generation, and we're already in the midst of making some adjustments to our advice process to make sure that we are actively having more of a conversation about that and identifying, those values or things that are important to our clients. But it's a work in progress for everyone.
I think we need to actually be giving a lot more advice around purpose, purposeful advice. So what's the purpose of this? What is important to you? How would this impact you in the future? And if you are doing more purposeful conversations, then they are more entrenched in the answers. They're easier for them to answer those questions. They're more likely to take advice. And so if purpose is really important around climate change and getting on board more with making sure that they are getting solar and other bits and bobs that might be related to climate change to properties and so forth, then we should be encouraging those questions. And it's just even that topic that you raised through the last week, it's made me start thinking as an advisor how we're asking those questions and putting those into our very long so far fact find.
One of our audience questions was, will it make a difference, Matt? So getting right down to it, how will it make a difference to clients? Is it going to work?
Yeah, well, as far as, from the ministry's perspective, we're concerned about whether or not it'll make a difference to actually behavior change, as far as, moving money away from riskier investments from a climate perspective towards safer investments, towards investments in things that are going to be financially beneficial as we transition to an economy with more renewable energy, with more electric transport, those sorts of things. But as far as, is it going to make these kinds of disclosures, I think, are going to be very helpful to institutional investors who have been calling for them. Like you have your BlackRocks and those kinds of places that have been asking for this stuff for a long time. And this actually, the framework on which these kinds of disclosures are based, called the Task Force on Climate-Related Financial Disclosures Framework, TCFD, remember that acronym because it's going to come back to haunt you many times, I'm sure, in the next few years. That's a product of this group that was set up by Mike Bloomberg. So those people are very interested, and it's probably going to move the needle for them. But as far as individual investors, again, if their values are aligned with wanting to live in a place that they feel will not be as much of a risk of climate change. As I said in Wellington yesterday, I would not probably purchase a house made out of concrete and stone in Wellington, not because the risk of a catastrophic earthquake in any, and even in the period that I would have the house is actually that high. It's just a risk that I don't feel comfortable with. And other people might feel the same way about purchasing coastal properties or about investing in companies that are, very high in their emissions. There's obviously obvious ones like oil companies, and then there's others like Air New Zealand, which are very much beloved, I think, by the public in New Zealand, and
not so much maybe at the moment.
For good reasons, but they're also a very high emitter. Air New Zealand's not doing anything wrong; they're an airline. Of course, they're going to be a high emitter. But for some people, it may make a difference if they can invest in something else that is not a high emission activity.
I suppose if this is actually something that's coming, we've got no choice than it's coming. We need to get on board to educate our clients about those choices and how it can impact them. And I think that's quite exciting.
Yeah.
So you and I will be having a chat soon, just more about how I can incorporate that discussion.
And getting on board, we're just talking about getting on board with that, I think it's the same thing around financial education. And, it's not just about the impact that we can make, but we need to be working with external entities and getting them on board. And the message needs to be, in order for us to bridge this financial literacy gap in New Zealand, we can't do it on our own, but together we can make a difference. And when you're sending those messages to organisations that you can actually make a difference, and you're building that awareness, things that we're doing, and we've been doing it for the last couple of years, and we're evolving in that space, is around working with education sectors, employers, because a big shift needs to happen with our future generation in the education sector, and it needs to happen within the workplace, and that's our employers. So it's about creating that movement, getting people on board, working with us, alignment, values. I think that's really important.
There's a whole lot of people working from home now. They're not having so many emissions with driving to work and peak hour traffic. That's a good thing, right? But are they spending that saving time actually being able to look at financial literacy and setting some goals? So there's an opportunity there. There's loads of opportunities.
But the way diaries are changing and lives are changing, and there's social change, which gives us an opportunity to go through that. Now, clearly, advice processes will have to change to reflect, taking into account customers' purpose or their values. I just wondered if you'd like to sort of imagine how that process might change.
I think that the connection that we have with our clients will need to increase. I think we will need to engage in a process a lot more regularly than what we are now, and just touch on those processes more, and engage with people to keep them accountable. And we just need to make sure we're honouring service that we do offer around that, so that people can trust. So one of the things that the Money and You document is amazing research, is all around building trust and rapport, and I think we've just got to do a lot more work in that space from a consumer point of view.
One of the things we spoke about before, to that point around trust, was that when customers come to you, they may have a set of assumptions or expectations and it's possible that they may even be assuming that you are going to take a certain view around ESG perhaps into account. And then, of course, if they discover that you're not, as was the case perhaps a little while ago with people discovered where their investments were going, then there can be a breach of trust, can't there?
I'm not an investment advisor, so I can't really comment on that example, but I would expect all my domestic foreign general clients to have an expectation that I understand their property and I've insured it correctly, and that I've asked the questions that I need to know to ensure that I've done it properly. So if you look at it from that perspective, they'll have that expectation that I've done that I've shown them what the risks are. And with everything in compliance and regulations, I've got to demonstrate that. So that increases that experience with the client, because they're getting those questions and they're getting it documented.
And it makes them feel more comfortable that you have,
You're the knowledge base,
Yeah, absolutely.
So we need to increase our knowledge.
Yeah.
But sometimes it's not about knowing everything. Again, that goes back to collaborating with other people that might specialise in different areas, because there's just so much going on in our space, so many different products, so many different providers, so much education that...
And we feel that way, but imagine what the clients are feeling.
Yeah.
So they can go online and find so much information now, but they still don't know where to go.
Yeah.
They won't know, if you take it away from the climate discussion, but they won't know that this reinsurers over here is going to be better for melanoma than this one over here. They're not going to know this insurer is going to be better or easier to work with agreed value for self-employed clients than this one over here. They're just not going to know that, and that's actually our job, to share that knowledge, to share those stories, to use the platforms that people are using to document and get those stories out. I've heard that a lot this morning.
Matt, you have a room full of financial advisors, and if there was one thing that you really wanted to get across to them about the new climate-related disclosure regime, what would that be?
Just that this is something that I think is ultimately going to be very beneficial for all of you and beneficial to your clients, because it's going to be identifying risks that, again, is already there, like the risk from climate-related impacts, both from the physical side of things, from your storm surges, bushfires, floods, as well as the exposure to, say, like an increasing carbon price, which, because of changes to the emission trading scheme, now that carbon price is actually going to go up potentially quite significantly over the next decade. It's going to start to actually quantify those risks, and like the Westpac report, put some numbers behind them. So it'll be, it has the potential certainly to be very informative, and and if you are able to, start to upskill yourself in this area yourself, you'll be able to pass on that knowledge to your clients. And I think, again, because of that value aspect of climate change, especially for a lot of people in younger generations, like they're really going to appreciate, I think, if you're able to speak about that to them. I would also encourage you to ask your clients about how they feel about these kinds of issues. Some might not care at all, but a lot of them actually really will. And I think if I were talking to a financial advisor for myself, I would want to be able to have that conversation with them, be able to trust that they're making decisions or advising me in ways that have my values in mind.
And one of the couple of questions, one is what is the price of carbon, and where does it go, and what do we think that is going to affect?
Sure. So the price of carbon in New Zealand is regulated by something called the Emission Trading Scheme, or ETS for short, which for a while has basically artificially kind of capped the price of carbon at around $25 per ton. Due to some reforms during the last government and that are continuing into this government, that price cap has been lifted, and there's other levers coming into play that are going to potentially increase that price somewhat more substantially. It's worth noting, though, that the entire agriculture sector is basically exempt from the ETS, although there will be a decision point sometime in the next few years about whether the agriculture sector comes in. And again, like that's another risk that is existent. You know, if you are investing in the agriculture sector, I would want to know as an investor, like how they're preparing for that possibility of having the prices of their emissions accounted for in a way that they're not currently being accounted for. But yeah, the price of carbon is something that is definitely going to be and much more of a significant issue now that that $25 a ton price cap has been lifted.
Right, yeah. Another one of our audience questions was, going back to the issue of accessibility of advice, was what should advice cost? And
It's not free.
Yeah. I don't know. Yeah, like you're saying, not free, but
Well, it depends on whether we're allowed to continue to receive commissions or not, I suppose, is the way I would look at that. At the moment, we've obviously got that open to us at present. I fear that if we were to limit those, lower them, do what Australia has, then you can clearly see over there that they are not getting access to advice because they just don't want to pay for it, or they don't have the ability to. One of the things that I notice is that the perception that they are not wealthy enough to get advice is something, a barrier that I think we need to get over, because obviously that is bigger than what is being put out there at the moment. People are reluctant to put their hand up because they don't see themselves as being important enough. Kiwis need to get a real handle on they're worthy, they're capable, they can make smart decisions, and they can grow and be okay with being wealthier than what they are today. And that's exciting to be a part of that, for sure.
yeah. Ryan, how do we deliver advice more efficiently? Is that
More efficiently? Yeah, scalability is really the challenge, isn't it? So, and I think on the how much is advice worth, the consumer ultimately is the decider, because they're choosing to come or not. That is dependent on the value exchange. So what do they get for, and the referral piece you were talking about before, Katrina, around that word of mouth and the growth of that. But to grow someone's net wealth and worth, starting from a younger age, and them seeing value in that exchange, is how do you share or communicate that story to be what an advice conversation and purpose of an advisor is. I think second question.
just how do you deliver advice more efficiently?
Yeah, scalability is, and how do you get that? So, I think we're all staring down that digital element in that, and how does that assist you in your advice conversation? How do you interpret that data and from the world of information that's at your fingertips as an advisor? But how do you do that really quickly and efficiently in a space where time is money? And I think COVID has given us certainly a great push into a space where we can be really efficient in that conversation, as opposed to driving across Auckland for 5 hours and on a return trip for a 1.5 hour conversation with a client.
I think if you look at also the disclosure requirements around what we earn, commissions we receive, fees that we might charge, I see that as being a huge opportunity to turn that into a document also about what those clients can expect from us for that. Because we tell them what they can do, we tell them to come to us for anything that they require thereafter. But do they really remember that? Do they? I mean, I've just had a client who I've spoken to many times who's just gone direct to an insurer. They didn't inform me that she'd had a claim. They declined it. Didn't inform me then either, which is a challenge. Got involved, got it overturned. That's the client experience that we want to give our clients, that our industry gives. And I think if we were able to use those disclosure requirements there, but turn it into, this is the service you can expect from us, and we keep living to that, then I think we will actually find our clients won't leave, the retention will be higher, and there'll just be more work involved in actually all the other things we can do for them.
Creates more opportunity.
Well, that's fantastic.
Yeah.
And thank you everybody for joining us. And Matt, Ryan, Katrina, Camilla, thank you so much for sharing your thoughts on financial advice and capability.
Thank you.
Thank you.